Most people think trading is about predicting the future, but the truth is nobody knows for sure what's going to happen tomorrow. What traders actually do is read the market right now, in the present moment. And the way we do that is with something called technical analysis, looking at the charts and price movements to understand what's happening. Technical analysis sounds complicated, but it's really not. At its core, it's just the study of price charts. Think about it like this. Every time someone buys or sells in the market, that decision leaves a footprint. When thousands or millions of people make decisions, those footprints form patterns. And those patterns are what we see on the charts. So instead of trying to guess what the market should do, we look at what actually the market is doing. You may have also heard of fundamental analysis. That's when traders look at the big picture. Things like interest rates, company earnings, or inflation reports. Here's an example. Imagine Apple releases a new iPhone and their earnings are fantastic. A fundamental trader might think, wow, that's great. Apple stock should go up. But a technical trader, on the other hand, doesn't even need to read that report. They just look at the Apple stock chart, like this one here. If the price is trending higher and breaking resistance, they just join in. Now, neither approach is wrong. Fundamentals explain why the price should move in one direction, and technicals explain when the price will move in that direction. To give you an example you are already familiar with, you can think of fundamentals like the engine of a car. It tells you the car can move, and technicals is like the steering wheel. It simply tells you which direction to drive and when to turn. Now, why do traders rely so much on the price chart? Because markets are really just people, buyers versus sellers. It's always fear and greed, or hope versus panic. A chart like this shows you that human behavior in real time. Look at the chart here. If price bounces off the same level 3 times, this is not magic. It means buyers are stepping in at that price to push the market further up. If price breaks through a key support and keeps running, it means sellers were stronger than buyers at this point. Think of it like watching a football game. You don't need to see the coach's strategy. You can watch the players on the field and see who is winning. There are 3 big reasons beginners like technical analysis. First one, it's visual. You don't need to read a 20-page report. You can look at the chart and instantly see if price is going up, down, or sideways. The second reason is that it works everywhere, across all markets. You can use technical analysis on Forex, stocks, cryptos, indices, because in the end, all markets are driven by supply and demand. And the third reason, it gives you timing. You can precisely enter the market using technical analysis. Fundamentals might tell you that the price of gold, like this one here, should rally because of inflation, but technicals tell you exactly when to get in and where to place your stop loss. Let me give you a really simple example. Imagine you are looking this chart here that represents the euro versus the US dollar. You notice that every time price gets close to 1.1544, it stops falling, and at the same time it starts moving back up. That's a clean sign that buyers like the euro exactly at that level. Now, you don't need to know anything about interest rates or European politics to see that pattern, right? The chart already tells you the story, and that's the beauty of technical analysis. The chart is like a language, and once you learn to read it, you can understand what the market is actually saying. So, here is what I suggest. Open up a chart, pick any market you like, Forex, crypto, you can choose Bitcoin, or indices, you can choose Nasdaq or German 40, the European indices, or even stick to the Euro US dollar. Don't add any indicators yet and just look at price. I want you to ask yourself, where is price moving up? Where is price moving down? And where is price pausing? This simple habit will start training your eyes to see the trends, the ranges, and the turning point. It's like learning to read letters before you read a whole book. To sum it up, technical analysis isn't about fortune telling or any magic pattern. It's about looking at price chart and understanding the story behind the moves. Every candle on the chart is a reflection of human decisions, buyers and sellers in action. Once you learn to read that story, you will have a powerful tool for making trading decisions. In the next video, we will dive into the basic of price charts, and that's how to actually read a candlestick, what time frames mean, and how to get comfortable with the overall look of a trading chart.